IT Pro TV, an easy, entertaining approach to online IT training. Access over 2,000 hours of up-to-date, high-quality video content live and on demand for a free 7-day trial and 30% off the lifetime of your account. Visit itpro.tv/startup security and use the code SS30. Gain control of cyber risk with Tenable.io, the first vulnerability management platform built for today's elastic assets like cloud, containers, and web apps. Discover a fresh, asset-based approach that prioritizes vulnerabilities while seamlessly integrating into your environment. And improve ROI with the first elastic licensing approach based on assets, not IP addresses. Tenable.io delivers the data and context you need to secure your elastic attack surface. Start your free Tenable.io trial today by visiting Tenable.io. Welcome back, everyone, to Startup Security Weekly. A couple of quick announcements. IT Pro TV's courses now include Computer Hacking Forensic Investigator V9, Kali Linux, CompTIA A+ 901, and Accelerated CompTIA Security Plus. Premium annual memberships include all video content as well as access to virtual labs and Q&A forums. Normally, you'd pay $85.70 a month or $857 per year, but we've got a special offer for our listeners for a limited time. Get 30% off monthly memberships for the lifetime of your active subscription using the code SS30. Also, Wild West Hackin' Fest is coming to you by Red Team specialists from Black Hills Information Security. Join us on October 27th and 28th, where there will be talks by Dave Kennedy, Deviant Egypt, Chris Nickerson, Chris Gates, Mike Poor, Sub-T, and more. All hands-on workshops will be available to all attendees. WildWestHackinFest.com, HACKIN Fest.com. Anycon is happening. It's not just Anycon. It is, well, Anycon. Albany, New York on June 16th and 17th. There will be a Capture the Flag, Hardware Hacking Village, and a ping pong tournament. Dave Kennedy will be delivering the keynote. Security Weekly will be there. Doug White will be there doing Hacker Movie Trivia, handing out Security Weekly t-shirts, stickers, glassware, and a select amount of our brand new Security Weekly Challenge coins. And finally, the first B-Sides in Uganda, B-Sides Kampala, is going to be held October 14th and 15th. The CFP is open now until July 15th. They're looking for talks on network security, web application security, innovative attack and defense strategies, malware analysis, biometrics, evolutionary computing, robotics, and bonus points if you bring an actual robot. Visit bsideskampala.com to submit your talk today. Sorry, I forgot to read the announcements in the first segment, so there was a lot of them. But we got through them, and now we're ready to talk about some startup news, Michael.
It's one of the parts of the show I always enjoy. And sometimes I like to get your take on things. Let's start with this one. Should you listen to the business gurus? I mean, obviously, I think people should listen to us. But I've never held myself out as a guru. I don't think you have either. So they should listen to us. But there's an article I grabbed, and I just thought it was good. And it was kind of pointing out how a lot of the advice out there, if you're not careful, it'll conform to whatever bias you have. So you should totally listen to customers. Nope, don't listen to customers at all. You should totally focus on one thing. Nope, you should do a lot of different stuff. Nope, you should. And so, what I've kind of found is I've always taken what I call the Bruce Lee approach, which was borrow from the things that work and test them. And learn from them. And if it works, keep doing it. If it doesn't work, don't do it. I kind
of just had this notion of it's kind of like the way I tend to approach it is it's kind of like threat modeling for applications or for network security. I go through like this business modeling, right, where you take different approaches and advice and you kind of run through the model in your head like, well, like what would that do? What impacts would that have? How would it help? How might it hurt? And you just kind of model it out. And, you take everyone's advice at face value and go, oh, well, that's what I need to do. My advice is to model it out. And I think that's pretty common sense kind of stuff. I don't think it's anything really new and innovative, but, I like to model some things out. And as we've said in the past, don't be afraid to, after you model them out, don't think about it too much. Go do something. Doing nothing is certainly not going to help you.
Yeah, and I think what you pointed out is there's a fine line. There's what I always like to do. I maybe do modeling by a different name. I got to think that through, but I always try to understand, okay, why did they do this and why does it work? So for me, it's always about context. Mm-hmm. So if you've been in the industry for 30 years, you've got a ton of money and a bunch of people that already know your previous track record, Well, then whatever worked for you is not going to work for somebody who's getting started at 20.
Yeah.
And so, like I always look at that context and say, okay, but why did they do that? And does that still work, or was that a one-time trick? And then I look for some trends and patterns on that. But what I've learned in the last year or two is the second part, what you just said. Don't get too hung up on it. Then try it, but small bets, simple stuff. Try it, see if it works, move it forward, and then move on to the next thing. I've noticed that sometimes people will reach out and they kind of want my opinion on, do you like A or do you like B? Or who do you listen to? And, I listen to a lot of people.
Yep.
I meld it together. And I think there's a lot of really smart people out there that frankly sometimes say some pretty stupid stuff, but then there's some really silly people that say some really brilliant stuff. And I think the trick to me is just observe it as it is and then figure out what it fits. But then it's a why. Like I always want to know then, why did it work? Why does it fit? Because I think if you can't answer that, well, I don't know. Maybe I'm slowing myself down by being able to do that. I'll tell you what, though, if you want to stand out. So I'm always fascinated by people who do stuff like this. So Tech Investor, this is a headline. Tech Investor analyzed his 5,000 monthly emails and explained how startups can stand out. Now, what's interesting is when he broke down his emails, he was pretty fair. And he said, look, most of these are newsletters and updates and things that I don't really need to worry about too much. But what he started to notice was when he replies. So he said, like, look, I reply on the train ride home. I seem to do more on Wednesday than other days. The top recipients were the people who were already in his network. And so that's the key to this is, this guy said, look, I have above average email volume, but he really broke it down. And he said, if you want to cut through the noise, don't cold pitch me. Go find whoever my close advisors are, convince one of them, and then they'll make an introduction, because if it's coming from them, I'm already going to see it. I'm already attuned to their names, to their stuff coming across it. And think about that with you and me, or anybody else. If I see somebody, if you say, hey, Michael, would you talk to so-and-so? I'm in, and vice versa. And
we just did that with Matt in between the segments, actually. Yeah.
And so that's how a lot of these types of things start to work as we're taking a look at it. And but I thought it was interesting because it wasn't the age-old, well, a friend should introduce me. It was much more of I went and looked at the data. Let me tell you, if you're just pitching me, there's too much noise. I'm not going to pay attention to it, and thanks. So I thought it was interesting. He did say, though, if you come in cold, then, don't BS me. And I'll tell you, I tell you what, I got a email pitch today. I was impressed. I'm going to take it, and once it goes public, I'll mention it. But they basically said, I started the new series, the Security Slapshots. They said, hey, we've read them. My CEO wants to do it. In fact, I'll tell you what. One of the pitches I got was our CEO of the company is a former NHL hockey player. He'd love to do a slapshot. You had my attention. I'm like, yeah, let's do it. You're right. And the one today, they actually said, here, we read it, we like it, and here's our thoughts. Are you interested? Yep. Boom, solid. Like it caught my attention. It didn't take a lot of time, right on point, and it was interesting. So it made it really easy to go forward and knock it out. So
yeah, I think when I look at my inbox, I've gotten to the point where I can really tell who's done their homework and who hasn't. And I tell you, if you haven't done your homework, it's instantly deleted, and I can tell pretty much instantly just based on what you're pitching. For example, I probably get a couple of emails a day about people saying, well, your blog articles are really fascinating. And I'm like, we don't really post. We're a podcast company. Or they're pitching me on something that's like completely not security related. And I'm like, dude, you've done no homework. Like there's an about page that tells what we do. You didn't even go read that. You're just blind pitching a bunch of podcasts and whatever. And that's the ones I will respond to are the ones that actually did at least read the about page and understand even a fraction of what we do. Those people I will and have engaged with, even if it's a small percentage, but if it's a cold email, sometimes I will, based on that criteria, respond. So I guess people can get value from that. That's awesome.
I've done the same thing. I can tell pretty quick. I get a lot of pitches, and I'm down to I take 3 actual pitch conversations a week. That's kind of my limit. Sometimes I'll do a couple more, but that means I'm accepting about 120 or so pitches a year right now.
Yeah.
And what I've learned with it then is that, no surprise to anybody, I'm a straight talker. But if you're close to something, or it looks kind of interesting, like if it's all just bland marketing speak and I didn't understand any of it anyway, what I've learned over the last 2 or 3 years of doing this is if I reply, then you just hit me with more and you suck up more of my time. I just want to bang my head into a desk. But what I've started doing is if you're pretty close and I can tell you didn't just cut and paste this in, I might write back with, I'm sorry, I don't see the angle here, or help me understand. And then one of two things happens. They don't respond back, or they come back and they say, right, okay, well, here it is. And they level it up. And I find those are always kind of interesting. And I'll give you an example. I had somebody, I don't remember even who it was. They sent me something, some survey they had just done. And they said, so this proves, that executives are stupid or something like that. And I wrote back, well, I'm reading the same data. And what it actually suggests to me is that executives care, but that the security team hasn't convinced them, hasn't provided them a solution that allows them to get the job done and is standing in the way. I said, so, I'm happy to have the conversation, but didn't even bother to respond.
You know how I
too bad.
So if you didn't know me at all, Michael, and I sent you an email and I started it with, Michael, I'm a big fan of your blog on CSO. I liked your article on XYZ because of ABC reasons. If I started my email with that, I probably have a much higher percentage that you would respond to whatever follows that, right? If it made sense.
Yeah, if it made sense. What I do see, so for example, I just did, I've got one more in the series on cyber insurance, and it's completely changed a lot of my thinking on cyber insurance. So now I get a lot of, you should talk to me about cyber insurance. Guys, I just ran 6 articles on cyber insurance.
Right.
The wrong time to hit me with that.
Yeah.
But, on the Slapshot side, saying, hey, I like what you did with that, can we participate in that? That's a good story. And in fact, that's what happened this morning. I've seen your Slapshot. Here's a link. Here's what we liked. Here's the they didn't waste my time. Like it was right. Yeah, those tend to get my attention. Yeah, no, you're right. That definitely works. Let's talk about startups versus businesses. This is a theme you and I have built on. And so I'm kind of curious your take on this. And I feel like it's a little bit about putting some semantics out there, and yet I didn't have a problem with it. And the notion is, go build a business. Don't try to be a startup. Now, before I forget, I got some feedback this week from some of our listeners that, Paul, our advice is helping them, that we've got people that are looking at, starting smaller than their ideas right now with what can they do nights and weekends? How can they do some consulting on the side? How can they test it out? And it's great. And I've responded to everybody. So if you're in that situation, hit us up, tell us what it's like. Because one of the people I responded to, I made it really clear, you're not alone. Like it may feel that way at times, especially when you're trying to wrap your head around this stuff. You can reach out to us, and we'll respond. Short, tight, but we'll respond with it. But this to me kind of connects to it. The idea here is you don't have to be big. You don't have to be the next unicorn. You start small. If it starts with consulting, start with consulting. And all I would say there is just stay in your lane. And I don't mean that as a derogatory thing, like do all you can do. What I mean is don't get distracted. Do something. And what have we said before? Get somebody to pay you your first $1,000. Then earn $1,000 a month. Then start to figure out how to level that up. Now, obviously, I think a lot of people would struggle to live on $1,000 a month. But if you're just starting something on the side, right, you got to get paid. And then you got to get paid a little bit more, and you got to get paid by more than one person. And if you can start figuring those pieces out, then it kind of comes together. And what I thought this made sense with here, and I'm going to have to just kind of paraphrase this, but what they looked at was a lot of people look at this concept and they say, okay, I've got a great business idea. Now I just need an investor. And then once I have an investor, we're off to the races. It's all going to work. And it doesn't work that way. Investors come with a certain set of pressures and expectations. But by the way, you don't get an investor because you had a great idea. By the way, I know there's examples where that does happen. But typically, you've got to go show somebody that you've got actual product market fit, that you're solving a problem in a way that creates value, that levels up the organization. If you're not doing that, then why would I invest in you? Because you seem like a nice person. And so what this basically said is just take your time, go build a business, build something sustainable that actually turns a profit. It's not about, let me flip this. I'm going to go buy it. In 5 years, I'm going to sell it. And then I'm going to go retire and have a big yacht. Instead, go find something really cool, solve it, and be really good at it. So I thought that was interesting.
Yeah, no, I agree. And I think bootstrapping definitely breeds that build a business culture more so than the startup. And I think you can't lose sight of that.
Yeah, I mean, to be clear, there's a time for money. There's a time where your timeliness to penetrate the market absolutely requires a big infusion of cash and the guidance from somebody who's been there, done that, and you want them to have a vested interest in it. That makes a lot of sense. There's also certain types of problems that you're trying to solve that are really expensive. So you need a prototype, or you need something manufactured, in which case then, yes, an infusion of cash and a way to make it work also makes sense. But this whole, I got an idea, once I get investors, we're off and running. I think bootstrapping it, you're going to learn a lot more. And as you and I have talked about a lot on the program, you need to learn sales. You need to learn marketing. You need to learn some of these concepts. And I don't know of a better teacher than going through it. Mm-hmm. Yes, using structured accountability and working through some of these accelerators, if you can get accepted and stuff, they're great. But you can get a lot of that, but you got to go do it. There's talking about it and there's doing it. Get off the couch, try it out nights and weekends, keep it simple. And there are a ton of stories of people who did something night and weekends and it took off enough where they quit their job, changed their lifestyle, and lived happily ever after. And that could be you if you're listening. So that's fantastic stuff. What do you think of Google's 20% time?
So,
I'm sorry.
Yeah, well, no, I was just going to start talking about this because I think it's intriguing. I think Google's 20% time works for Google because Google can just add more employees to complete all of their projects on time, and they're a big enough company to do that. When you're a startup, you can't necessarily, well, you can't. I don't think you can adopt the same model as a company the size of Google, and I think it's just pretty much common sense. I do like where the article talks about, because this is how I would approach it, coming up with a model that fits your business, essentially, is what the article is talking about, just skimming it, right? And so if I were to do a similar thing here with my own startup, I would maybe schedule some time and schedule a day. It's kind of a page out of like Logarithm's book. Logarithm does this as they've talked about on the show, right? They've got, hey, everyone stop what they're doing, spend a couple days. We can plan for that, right? And come up with some innovative stuff. And you know what? That works and it fits into their product. Or you take a day that you plan out into the future and you say, we're going to go as a team learn about this new technology, this other technology. Someone's going to, give some training classes internally and learn from each other. I think if it's scheduled out for smaller companies, it is highly effective. That's my take.
I like it. And the only thing I would say that I like about it in smaller companies is use that time to figure out how people can stay connected to the vision. What I start to see now with some of the smaller companies that I work with, the startups, is people like, look, you got to pay the bills, so you take on this project or you get entrenched in this effort, and it's a good effort and you really like it. But what I like about the notion of a 20% time or some sort of a dedicated time on whatever percentage and schedule works for you is what you're saying is I want you to stay connected to whatever passion you have for our vision, right? I like to use value prop as a guiding star. Mm-hmm. Do you feel like you're contributing to that? And by the way, are you taking everything else that you're learning and are you contributing that in? And so to that extent, I love this as a concept, but kind of like it followed the business guru's advice. You're right. Look, when you're an organization like Google or some of the others that have done it, they've got the capitalization to do stuff like this.
Exactly.
But what I would say, too, is I think there's another part to this. Now, again, giving up a day a week, right? That's 20%. That's a full day a week. Wow. Okay, that feels like a lot. But what I also think is interesting is the more disciplined and focused you are as an organization, which goes back to value prop as a guiding star, then the easier that is. Like you can take that time. And all I can say in my own experience is over the last couple months, I've consciously stopped working on weekends. I consciously step away during lunch and don't bring electronics with me. And now my wife and I go out we're up to like a 5.5, almost 6 mile walk every night. And then sometimes I'll go sit out front, no technology, just sit. Frankly, I'm just watching cars drive by. But what I found is some of that purposeful, unstructured time or some of that purposeful time away has made me much more focused when I'm at work. Right. And I'm getting more stuff done. I've had a couple people compliment me that, I've grown more as a business in the last 30 days than the previous 6 months. Some of that might just be, the intense focus I have on it. But gosh, some of that might be some of those changes. So I think there's merit in saying take some structured time away related to the business, then come back and see what fits. I like it. 20%? Yeah, all right. Well, maybe. I mean, depends on the business you're on, I guess. All right. Always looking for things that I think are interesting. 90% of VC investment in follow-on rounds, only a few focus on the first deals. So this starts out, and of course, they're going to have my interest as soon as I mention friction. So it says it's tough to sort out.
A lot of friction
fact
going
from
on.
fiction. Yeah, but one thing's clear. Have you noticed, Paul? There's like two narratives, right? Oh, there's no money any place. Well, there's too much money every place. Oh, these deals are getting so large. Oh, these seed rounds are so small.
Yeah, it's all over the map, dude. I don't know. I think a lot of it's just clickbait. I think, can we just lump that in with just clickbait? And it depends on, to steal a page out of your book, Michael, it depends on your lens and how you're looking at things. So,
yeah, I just, and that's why I kind of keep pushing this out because you stand it. So what I've started to look at, and this matches up to stuff that we've talked about, but what they basically said, look, don't view fundraising as your end goal. So that's a theme we've been building on. But this is the one I really kind of like. Sales and customers cure all. Right. And this is how I look at it more and more. And I think I've had a couple people point out to me that we actually see like there's West Coast investing versus East Coast investing. And now we're starting to see pockets, right? I mean, Boston's popping up big. Austin's big. Silicon Valley's still big. We're seeing a lot of stuff now, right? Denver, the Maryland area, right? So when we're looking at a lot of the stuff that you and I are tracking, there's probably 8 cities in the U.S. that are driving a lot of these different things, and they all have regional flavors to it. But what I'm starting to notice is this. Do you have a problem that people are aware of that they want to solve, and are they willing to pay you money to solve it? If the answer to that question is yes, and it's yes more than once, then you are less of a risk to an early round investor. And we've brought some of these seed stage, early stage investors on our program, and they're looking for an idea. They're looking for a concept. They're looking for something in an area that they know well, that they think can solve a problem. And if you can bring that to them and say, oh, P.S., I've got these 10 companies or these 5 companies that have paid for it, and here's our customers, and here's what it's looking like, and here's how it's working. I mean, let's obligatory bring up Shark Tank. How many times do they say, do you have a PO? Do you have orders with the company? Yes. And have they reordered? Yes. Okay, so what's your problem? I don't have the capitalization to fill the reorder. Great. Different problem than, well, I mean, we've talked about it. They said they liked it. They gave us a thumbs up and a smiley face. And so I like this again because the way I we've talked with people about, do you do debt deals? Do you not do debt deals? Do you bootstrap? How do you look? Focus on it. And this didn't say profitability, but what this basically said was, will somebody part with their cash? Right, because the problem you're solving is a high enough priority for them, and the solution you're offering them is compelling enough that you're going to create the value that they need, that they're willing to do it. And like I said, to me, 3 is the start of a trend. 5 in a row, 5, you're getting the data that you need.
Right.
And as an investor, that takes the risk away.
So Honeywell has launched a venture fund, Michael.
Yeah, not surprising, but I like calling these out because, like I said, right, so we see more and more companies are doing this in more and more ways. Honeywell did it, $100 million venture fund. That is not a small fund. And and so it lists the names here. So Caterpillar's done it. Scotch Tape has done it. So it's 3M, but I thought it was funnier that way. Boeing has done it as well. Honeywell, a lot of people don't know this. Honeywell is a huge, huge billion-dollar organization. And among other things, they're big in aerospace. And so one of the things that's interesting is they're specifically calling out, we're going to look at technology and in aerospace. So I look at that and go, there's security implications there, 100%. Anytime you're looking at technology and Internet of Things and sensors and information, then security is at play there. If you're at home, so some of the reasons I bring these up is because they're going to be looking for solutions to these types of problems. You might have insights there. That it might be something small that is far bigger than you think. So I thought that was interesting. Now, these next 2 articles, you kind of need to take together. We can break them down separately. The first one, so Crunchbase comes out and it says, startup investments picking up in Q1. Like we're off to the races and things are going to do really good. And remember, you and I addressed the decline in Q4 with like look, it's end of the stop everybody, like you're freaking out over it. And they said, our bad, we freaked out over it, but look, money's back, money's flowing, everything's good. Next article, these both ran in the same week, like a day or 2 apart, said cybersecurity startups, They're going to be funded at a slower pace. They're going to have lower valuations. Now, this one in particular, I kind of wanted your opinion on it. It starts out by saying that there were two challenges. So what it basically does is it says, okay, a lot of this started back in 2012, and there's all these security problems, and that causes all this attention. And then FireEye got a ton of money, and then Edward Snowden happened, and so all of a sudden security matters. And it said, so here's two challenges. Many companies weren't even doing the basics right. And number two, the previous generation of security products were just plain inadequate. I think they missed on both of those. I don't. Telling me people aren't doing the basics right. I was on a call again today, and at some point I'm going to be pushed to actually try this out. But I've often said I could run a series of top 10 basics for 10 weeks in a row and not have to repeat once. I'm willing to bet I could do it for 5 weeks, but I'm actually thinking it's probably closer to 10. So this whole basics right, it's fundamentals. We got to get off that because it's loaded with too much crap. But then telling me that the previous generation of products were inadequate, like that doesn't feel right to me. Does that feel right to you?
No.
Like those were the problems we're trying to solve?
Yeah, I agree with the security basics thing being a bunch of bunk.
All right. So then handful of investment themes. Back to the better basics. I'll say I actually don't mind that as a theme. You just got to define for me what the basic is and how it works. Analyze and automate. We're watching that coming. But then solve the people problem. Look, if you've been following me for any period of time, the simplest way to piss me off fast is call it a people problem. Now, I'll be upfront. I wrote about this in Into the Breach, and I actually, and it's funny because I remember the discussion with my editor. It's left in there as a people problem. The only regret I have in Into the Breach is I left that. I go on to explain, though, in almost the same paragraph, we don't have a people problem. What we have is a paradox where we've disconnected people from the consequences of their actions. So they can't take responsibility when they want to. We don't let them take ownership, and we can't hold them accountable. That's the problem. It's that people are disconnected. So we don't have a people problem, and nothing drives me crazier than saying we've got a people problem because frankly we don't. However, if you wanted to say we could do a better job of creating user experience, all right, I'm in. I buy that 100%. And then it talks about DevSecOps. So here's my point though. Like when I've been doing this for 21 years now. I don't see this as being representative of our space. I don't see this as being representative of the problems that we're tackling. I don't see. I think this totally misses it. And so with that, it then coming back and saying, okay, so here's the deal. And I highlighted two pieces. It said revenue, cash burn, valuations just too far out of line. In 2016, we started to see the formerly high-flying startups get, course corrected. And calls some names out, but and then it says, and in 2017, we're going to see more companies running into trouble. Yeah. By the way, that's how this works. So, I don't see that as a sign then that we're going to have funded at a slower pace or lower valuations. I think it goes back to what Matt just said. How well do you articulate the value of the problem that you're trying to solve in the marketplace? And what I add to it is impact. What's your solution impact? If you can articulate that right, you'll be good. Look, you and I shudder. Well, I'll speak for you. I shudder every time somebody crowns another unicorn. I don't see it. I don't get it. But does that mean then that we're going to see lower valuations and slower investment? I need to go add it up. There's over $1 billion of security funds raised and that closed in the last quarter or two. $1 billion. So you're telling me we're gonna have no, there's more. There's more competition. Private equity is streaming into the space to free up that venture capital. So then there's gonna be more investments. People are hunting. Now, is there confusion in the marketplace? Yes. Is there complexity in the marketplace? Yes. If you're a startup, you've got to get past that. But telling me that it's going to be slower and everything else, all I wanted to point out is I pretty much disagree with the bulk of the analysis, except for those two lines that I completely agree with, that I think are part of the functional process. And P.S., if you're a security company and you're going to, not heed our advice and you really think your solution is you got to get funded, there's plenty of cash out there for you. You just got to go articulate your problem really well with really good value proposition.
Absolutely. There's too many problems to solve. Yep. Yeah.
RiskRecon. So RiskRecon, $12 million Series A. By the way, their seed round was a $3 million seed round. That's huge. So I don't know a lot about them. Software as a service, right? Vendor risk management. This is a space. We're going to see growing. If you look at the changes that came down in the last couple of years to HIPAA and other things. You look at the focus now on third-party risk management. You look at, frankly, and I don't mean to insult anybody, but the overall immaturity of our field to handle it. Looking to somebody else that can help you assess firms, I think that's on the rise. I think it's going to be a little hectic for a while because we're going to start by doing things that sound good, and we're going to codify it and work to where it starts to make more sense. But I thought that was kind of interesting. You have any insights? Have you come across RiskRecon?
I have not. I mean, I'm familiar with the vendor risk management problem a little bit. I think it's primarily targeting the enterprise, right? I think, mid-market definitely doesn't have this problem. So I'm not sure how much competition there is in the space, but
there's a ton. I mean, I would miss a bunch of names, but I mean, if you think about, right, so we've talked about Cyber GRX. They're creating a spot on this, and there's Risk Ratings, right? We've had James Gellert, Rapid Ratings rather. We've had Gellert on the program, and there's been 3 or 4 other people that have looked at and done that exact same thing. So I think it's a growing area, and what we find is a lot of people are really struggling how to do it internally versus externally. What I'm curious is when you sell it as a subscription, how are you validating it on that end? But maybe this is something we'll have to look into a little bit more. CounterTack, $20 million Series D. So they're up to almost $100 million in funding. And they are real-time endpoint threat detection and
EDR.
Yay. Yeah. So, what I thought was interesting was Economy ran a story basically saying after Trump's cybersecurity executive order, that made it easier for them in conjunction with WannaCry and also the type of stuff. And so it made it hot. Again, I'm going to say probably not. I'm going to say probably what worked here is they could show somebody that they had some strong fundamentals. Or, remember, right, the time you have the most strength with the bank is when you owe them a lot. If you've already got $80 million in funding tied up and you're not getting the product market fit you want, you're not getting the traction you want, then $80 million is a lot of money. And it might be easier for the investors to throw another $20 million at it. And what we probably need to start looking for here is let's see what happens with the board, and let's see what happens with the executive team.
Now these numbers are estimated, but it says CounterTack compared to Cylance. It says CounterTack has 71 employees compared to 720 at Cylance. Total funding for Cylance is $177 million, $97 million for CounterTack, and their revenue, CounterTack is estimated at $8 million and Cylance at $9 million. So that could be a reason why they got a Series D.
Right, and I was just going to point out, like it really could be that they're, lest I have no insight on CounterTack, but you're exactly right. Like when you start looking at that, and we know Cylance has had, right, Cylance just laid off in the last couple of months, 20% of their workforce and have like a really off quarter. So, and this kind of goes back to my point. I don't want to be the unicorn. Like I don't think that's a good strategy. CounterTack might just have some really solid fundamentals. They're executing really well, right? Because keep in mind, so when you get to a Series D, you're either late stage or you're growth stage, and that means that it's all about fueling it. $20 million for a Series D is not a big round. I mean, we routinely see $50 and $100 million Series CDE, so $20 million is not huge, and it might just be what they need to keep kind of fueling their growth and plodding along in it. But last part, and this is just more of if you tend to follow these things, and I think you should. Mary Meeker has, decade or longer now, been pretty much she issues a report every year, and it's the go-to read report. Like go read what Mary Meeker says about the internet and the trends and what's happening. Fortune ran a piece I thought captured some of the highlights really well, and the reason I decided to throw it in here is because we're in the startup space, and so I look at this for 2 reasons. Let's go take a look at what we see happening and why we think that that's potentially interesting or important, and then at the same time, let's also take a look at those trends from a security perspective and say, which of these growing trends then suggest we need to think about some of these things from a security perspective. Like they have a piece to this that's going to matter. So smartphone growth is slowing, but online advertising is growing thanks to mobile. So the growth is slowing, but you're going to see more advertising. Voice is on the rise. The bar for quality customer support is rising. To me, that stood out instantly. If you're a startup today and you want to be different, your support has got to be exquisite. You've got to be remarkable in that people say, wow, I love that. And you and I have talked about companies that have thoroughly impressed both of us. But I'm thinking back to your Linux laptop experience with how awesome that was for you. By the way, are you still enjoying that?
I am, and in fact, I've gone on to purchase another system from the fine folks at System 76, and I'm very happy with my purchase. Imagine that.
There you go. Talks about the e-commerce is growing, video gaming is evolving, still the early days, streaming media is growing, and then it talks about moving into China, moving into India, and looking at things there. So, and there's a lot more. It's like a 200-slide report. I put the link in the show notes to the report itself. But it's the kind of thing where if you're trying to understand your fit in the marketplace and where the trends are going, read it. You don't have to, it's not the end all be all, but I think it's a really interesting data point, and it gets a lot of people in investment circles thinking and talking. Awesome. So at least knowing it is useful to you.
Awesome.
In terms of journeys, for rare change, I don't have a lot to say. I'm just kind of executing and getting stuff done and enjoying it. I did get something. So this week, I was really excited about this. We talk a lot about cyber insurance. So I got Garen Pace from AIG, and we talk about what it's really like. And one of the things I talked about was, okay, but can cyber insurance actually help us level up? And okay, so do you guys pay out or not pay out? And answers to both of those are in that piece.
Nice.
It was a fun conversation. How about you, man? How are things?
Software development lifecycle. I'm about to get, some little hands-on with, building a production system to basically push out your software, right? And that's, I think, a really pivotal moment in certainly something that constantly evolves. But being able to have a stable environment to push from dev to QA to production, to kind of speak to that customer support, right? You need that foundation to build on. And I think when you're, early stage bootstrap startup, a lot of those processes may not be in place. So it'll be interesting to see where we're at, get an update, and make recommendations, and of course learn some things as well. While I have a long history with software, certainly as Matt and I were mentioning before the show and on the show with containers and DevOps, it's certainly evolving and changing, and I'm doing my best to keep up, and I'm going to be a little more hands-on with that technology so we can hopefully make some smart decisions and have an awesome process for pushing out software. So.
That's awesome.
It's important. Yeah, it's exciting.
I love it.
So that will conclude this edition of Startup Security Weekly. Thank you, everyone, for listening and watching. See everyone next time.